Alright, let's talk turkey. You see a stock like Constellation Brands, ticker STZ, take a hit, and your first instinct might be to run for the hills. But hold on, folks. Sometimes, the best opportunities don't come gift-wrapped in green arrows and soaring charts. Think about it. When you see your favorite six-pack of Modelo or Corona on sale, do you run away? No, you stock up. A temporary price drop in a fundamentally strong company isn't a fire alarm, it's a sale sign. The company's recent earnings report came in lighter than expected, spooking some investors. This is the classic short-term noise that can drown out the long-term music. A single quarter of softer sales doesn't erase decades of brand building and market dominance. The key here is to separate the signal from the noise. The company has been strategically divesting some of its lower-end wine brands to focus on its premium, high-growth portfolio. It's a strategic pivot, not a sign of collapse. Panicked sellers are dumping shares based on a single earnings report, but savvy investors are asking the right questions. Is the core business still strong? Are the flagship brands still flying off the shelves? For STZ, the answer is a resounding yes. The recent price drop could be the exact entry point long-term believers have been waiting for. Booyah! Now don't just take my word for it, let's look at what the big shot analysts on Wall Street are saying. In the case of STZ, we're seeing a fascinating trend upgrades and bullish price targets. Analysts at major firms have reiterated their buy ratings, focusing on the long-term growth story. Some analysts have slapped price targets on STZ that suggest a significant upside from its current levels. These targets are based on detailed models of future cash flow, brand strength, and market expansion. When you see a consensus forming among these experts that the stock is undervalued, you have to pay attention. The analysts are pointing to the incredible momentum in STZ's beer segment. Modelo Especial recently became the #1 selling beer in the United States. Wall Street understands that this beer division is a cash printing machine. When the experts are telling you to buy the dip, it's often a good idea to listen up and do your own homework. Let's get down to brass tacks, the fundamentals. A stock's price can swing wildly, but the company's underlying value is what matters in the long run. First, the stock is trading at a cheaper valuation compared to many of its peers in the consumer staples sector. Beyond the attractive valuation, STZ pays a dividend. A steady dividend provides a cushion during market downturns and acts as a sign of management's confidence. It's a tangible return on your investment while you wait for the stock price to appreciate. Constellation Brands has the backing of major institutional investors. These are the giant pension funds and asset managers who do exhaustive research before investing. The trifecta is here: a reasonable valuation, a solid dividend, and strong institutional ownership. The company has a fortress-like balance sheet and generates massive amounts of free cash flow. That's a recipe for long-term success. So, what could send this stock roaring back? Let's talk catalysts. Any easing of trade tensions or a reduction in tariffs would be a huge tailwind. Another major catalyst is continued innovation with new products. Of course, no investment comes without risk. Rising costs and inflation could continue to squeeze profit margins. Shifting consumer tastes and increased competition are real risks. The beer and spirit space is a battlefield, with global giants and craft startups all fighting for shelf space. Furthermore, any unexpected economic downturn could impact consumer spending on premium alcoholic beverages. Here's the bottom line. Some investors see today's price as a golden opportunity to buy a best-in-class company at a fair price. You have a dominant beer business, a streamlining wine and spirits portfolio, and a shareholder-friendly management team. The potential for a rebound is fueled by strong brands and a valuation that looks attractive. You get paid a dividend to wait. The decision is yours, but the facts suggest that for those with a long-term horizon, STZ might just be a hidden gem. Do your homework.